Palantir is up 79% in the past year, so it's no wonder you would be hesitant to buy. But I believe Palantir is just getting started. For those who don't know, Palantir is a software company that makes products for human-driven analysis using real-world data. Basically, they build platforms that integrate, manage, and secure data using AI. They are winning huge contracts, partnering with tech giants, and are changing the game for companies. Now, the numbers on this company are insane. In Palantir's most recent quarter, their commercial revenue growth grew 27% year over year to $299 million, and their U.S. commercial revenue grew 40% year over year to $150 million. Total revenue grew 21% year over year. U.S. commercial customer count grew 69% year over year, or 19% quarterly, and their total customer count grew 42% year over year. Not only that, their adjusted operating income has been increasing every quarter, and the same with their operating margin. Their adjusted gross margin is 83%, which is very good for a SaaS or software as a service company. High-quality SaaS businesses typically have gross margins between 75 and 90%. Also, Palantir's Rule of 40 is 57%. The Rule of 40 is a principle that states a software company's combined revenue growth rate and profit margin should equal or exceed 40%. So Palantir's 57% is phenomenal. They also reported their sixth consecutive quarter of GAAP profitability. 3 years ago, when the stock price was $35 a share, they were losing seven figures every quarter. Now they're making that. Palantir is nowhere near the business it used to be based off that factor alone. Palantir consists of 4 different services. The first is AIP. This is their artificial intelligence platform that implements AI into operational decision making. The AIP boot camps have been used with more than 915 organizations, some of which say we're saving about 14 million annually and it's only deployed to a part of our network. And in less than 4 months, we created something from POC all the way to production. Palantir has made us faster and smarter. This is huge because of something called flywheel marketing. This is when customers are so happy with their experience that they refer others to the business. Because of this, AIP is a huge growth driver for Palantir, as we've seen in their numbers. As spoken on their recent earnings call, in 1 to 5 days with the boot camp, we're able to do what used to take 3 months. And we're seeing that. As I talked about, we're seeing customers shortly after boot camp sign 7-figure deals. Foundry is a service that uses data and analytics to help companies manage and secure information. You input your information and then Palantir stores it. Foundry's ability to handle diverse data sources and its focus on security make it a preferred choice for companies that require sophisticated data solutions. The third service Palantir offers is Gotham. This enables the autonomous tasking of sensors from drones to satellites based on AI-driven rules. Gotham helps companies make informed decisions, maximizing the effectiveness of their assets in different operational environments. High-profile contracts with government agencies and large corporations showcase the trust and reliability Palantir has built. The fourth service is Palantir's Apollo. This deploys, monitors, remediates, and secures software across different environments. Its flexibility allows organizations to adapt and scale software solutions according to changing operational requirements and business demands. It enables organizations to stay competitive, agile, and resilient in an ever-changing digital space. Their integration of AI and machine learning into their services sets them apart from competitors. Unlike other companies that offer generic data solutions, Palantir offers specialized, secure, and integrated solutions to company-specific needs. This is a significant advantage in the market. Now, if we look at their balance sheet, they have $4.8 billion in assets and $945 million in liabilities. They ended Q1 with $3.9 billion in cash and no debt. Palantir's cash means they can invest in growth opportunities, pay down debt, or return value to shareholders through dividends and share buybacks. This is important because it allows them to expand their market presence. These numbers show Palantir's operational efficiency and why it's a financially healthy company. Moving on, Palantir's growth potential is enormous. They are continuously expanding into new markets and industries, driven by strategic initiatives and future plans by the leaders of the company like Alex Karp. Alex Karp, the CEO, has always had a chip on his shoulder. When it comes to Palantir, he's driven to basically prove he was right about Palantir, and he's been succeeding at it. He says, and this is the sixth quarter of profitability. The sixth quarter of profitability. I dare remind people that there was a time when no one thought we'd be profitable, when no one thought we could crack commercial, where revenue per person was called into question. So as AI and data analytics become increasingly important across different sectors, Palantir services will only be in higher demand. It's important to consider potential risk though. Regulatory challenges and market competition are threats. However, I believe Palantir's strategic positioning and innovative technology justifies these risks. Palantir's valuation does look expensive. They trade at a forward PE of 82, but I think Palantir hasn't grown into their valuation yet. They've only been profitable for 6 quarters. If you remember in the beginning of the video, Palantir is significantly growing their business on the top and bottom line. I think analysts' expectations are too low, and because AI is expected to be a $1 trillion industry by the year 2030, which is a 36% CAGR by the way, the software side is only going to grow. Right now, on the hardware side, Nvidia and all the chip makers are experiencing a boom, but sooner than later, I think more people are going to realize the software side will be the next phase. Because of this, I don't think it's unreasonable that Palantir could be a $1 trillion stock in the next 10 years or even sooner. Since Palantir's market cap is $61 billion, that implies a more than 16x ROI, or return on investment. All of that to say, I'm dollar cost averaging into Palantir. I'm not trying to time the stock, but I am buying because the fundamentals are only getting better. In the short term, I'm hoping Palantir goes down so I can buy at even cheaper prices because this company is putting up phenomenal numbers. Palantir's innovative technology, market differentiation, client success, financials, and enormous growth potential make it a compelling investment. While there are risks, the company's strategic positioning and unique offerings mitigate them. I believe Palantir is a buy, and people will make a lot of money in it, especially years down the road. If you want to hear my view on Nvidia, you can watch this video. Thanks for watching. J Money out.